What you're about to hear will cut through years of speculation, confusion, and outright fiction surrounding the Iraqi dinar. For over a decade, the conversation has been dominated by two extremes: wild hype about instant, life-changing wealth on one side, and total dismissal from mainstream finance on the other. Both are wrong. The truth is far more significant, more complex, and is finally moving from theoretical discussion to observable, technical reality. The catalyst is not a secret meeting or a rumored date, but a tangible technological and financial infrastructure project now being rolled out by the Central Bank of Iraq itself. The topic is the launch of Iraq's central bank digital currency, the Digital Dinar. And understanding what this launch actually means is the only way to grasp what a potential revaluation of the physical IQD would truly entail. This isn't about magic numbers, it's about monetary mechanics. Today, we will dismantle the fantasy and rebuild an understanding based on policy, technology, and global financial law. This is the operational reality of the Iraqi dinar in 2024 and beyond. Let's begin by defining terms, because misunderstanding them has cost holders dearly. Revaluation in strict economic terms is a formal, deliberate upward adjustment of a country's official exchange rate by its monetary authority, relative to a baseline, like the U.S. dollar. It is a sovereign policy decision. The Digital Dinar or CBDC is a digital form of the national currency issued and backed directly by the Central Bank of Iraq. It is not a cryptocurrency like Bitcoin. It is a digital liability of the state, just as a paper note is a physical liability. These two concepts, revaluation and digitization, are now inextricably linked. You cannot have a serious discussion about one without understanding the other. The launch of the Digital Dinar is the most credible signal that Iraq is preparing its monetary system for a fundamental transformation. It is the prerequisite, not the event itself. To understand why, we must look at Iraq's current economic predicament. For years, the Iraqi economy has been crippled by a profound duality. Officially, the exchange rate is pegged by the Central Bank of Iraq (CB) at approximately 1,320 dinars to the U.S. dollar. Unofficially, a massive black market exists where the rate can be 10 to 15% weaker, creating a huge arbitrage gap that drains billions from the state treasury. This gap exists because the physical, cash-based dinar system is opaque, slow, and vulnerable to corruption and smuggling. The government's dollar reserves are spent to defend the official rate, while vast quantities of physical dinars circulate outside the regulated banking system. This is the core problem the CBI must solve: establishing a single, unified, and transparent exchange rate that it can actually control. Trying to do this with paper money alone is a losing battle. This is where the digital dinar becomes the strategic tool. The primary stated goal of Iraq's CBDC project, as outlined in CBI white papers and statements to the International Monetary Fund, is financial inclusion and modernization. This is true, but it's only half the story. The deeper, more impactful goal is monetary sovereignty and control. A digital dinar, transacting on a regulated, permission ledger controlled by the CBI, changes everything. Every transaction can be tracked in real time. The movement of large sums can be monitored for money laundering and terrorism financing. Key demands from international partners like the United States. Most importantly, it allows the CBI to bypass the corrupt and inefficient physical cash network and distribute currency directly to citizens and businesses. This enables direct social welfare payments, public sector salary distributions, and eventually business loans, all in a traceable digital format. It brings a huge portion of the economy out of the shadows and onto a visible, controllable platform. This is the essential first step towards having a credible, defendable national currency. You cannot revalue a currency whose total supply and movement you cannot accurately measure or control. The digital dinar provides that control. Now, let's connect this directly to the revaluation thesis. The argument for a significant upward revaluation of the IQD has historically rested on Iraq's vast oil wealth and the potential for a resource-backed currency. This is an appealing but economically simplistic view. A currency's value is not just a claim on national resources, it is a claim on the productivity and stability of the entire economy. The digital dinar project directly addresses the stability and transparency part of that equation. By digitizing the monetary base, the CBI can execute a revaluation with unprecedented surgical precision. Here is the critical, often missed mechanism. A revaluation could be initiated and managed through the digital platform first. Imagine a scenario where the CBI announces that, on a specific date, all digital dinar holdings in official bank wallets will be redenominated at a new, stronger exchange rate to the dollar. The digital ledger would be updated instantly. Citizens and businesses using the official digital wallet would see their holdings reflect a new value immediately. This provides a stable, controlled environment for the new rate to take hold within the formal economy. It creates a beachhead for the new valuation. The chaotic physical cash system would then be brought into alignment over a managed transition period, with strict limits on exchanges and intense scrutiny to prevent the old, devalued physical notes from flooding in and undermining the new rate. This dual-track approach, digitally first, physically second, is the only plausible method for executing a large-scale revaluation without triggering hyperinflation or a black market collapse. The launch of the digital platform makes this technically possible for the first time. This brings us to the role of international institutions and U.S. policy, which is absolutely decisive. Iraq's financial system operates under constant scrutiny from the IMF and the U.S. Treasury. Their primary concerns are not the dinar's exchange rate, but anti-money laundering AML and combating the financing of terrorism CFT***. For years, Iraq has been threatened with disconnection from the critical international dollar clearing system, SWIFT, for failures in this area. The pressure is immense. The Digital Dinar project is, in large part, Iraq's direct response to this pressure. It is a tool to satisfy global AML, CFT standards by creating an auditable financial trail. Until this system is proven to be operational and effective, the green light for any major monetary reform, including a revaluation, will not be given by the international community. The U.S. Federal Reserve, which ultimately facilitates dollar exchanges for Iraq, will not engage in a process that could flood the global system with unaudited currency. Therefore, the successful rollout and adoption of the digital dinar is a non-negotiable checkpoint. It is the proof of concept that Iraq's financial governance is moving into the 21st century. The recent technical partnerships between the CBI and major international fintech firms for this project are not random. They are part of building a system that meets global compliance benchmarks. For the individual holder of physical dinar notes, this reality dictates a new set of imperatives, moving far beyond passive waiting. The number one priority is no longer predicting a date, it is ensuring regulatory compliance and provenant when and if an exchange process is initiated. It will be the most heavily scrutinized currency conversion in modern history. Banks and official exchange channels will be required to perform extreme due diligence. They will need to know, with legal certainty, where your notes came from. This means your original purchase receipts, certificates of authenticity, and bank wire records are now your most valuable assets. If you do not have them, you must begin constructing a verifiable paper trail. Furthermore, the process will almost certainly be digital first. You will likely need a verified bank account linked to an official Iraqi digital wallet platform to participate in any initial, orderly exchange at a new rate. The idea of walking into a local bank branch with a suitcase of physical dinar after an announcement is a fantasy that will end with the filing of a suspicious activity report and the freezing of assets. The future is digital, documented, and compliant. Let's also address the ecosystem of misinformation this topic attracts. The launch of the digital dinar has, predictably, spawned a new wave of scams. You may see offers for pre-launch digital dinar wallets, special exchange codes, or early registration for a fee. These are all fraudulent. The official digital dinar, when launched for general use, will be distributed through licensed Iraqi banks and authorized financial institutions following public, official guidelines. No legitimate entity will contact you unsolicited. Your defense is to follow only primary sources, the official website of the Central Bank of Iraq and statements from the Iraqi Ministry of Finance. Everything else is noise. So, what is the realistic path forward? The launch of the digital dinar is the opening of a new, multi-year chapter. It initiates a phase of *** technical testing, public adoption, and regulatory integration ***. The CBI will run pilot programs, likely starting with government salary payments. They will test the system's security, scalability, and interoperability with international banking networks. This phase is about proving the system works and can be trusted. Only after this platform is deemed stable, secure, and widely adopted within Iraq's formal economy does the conversation about adjusting the exchange rate become operationally feasible. This process is measured in years, not months. It is a sequence: first digitization and control, then stabilization, then potential revaluation. In conclusion, the launch of Iraq's digital dinar is the most important development for the currency in a generation. It marks the end of the era of pure speculation and the beginning of a technical, measurable build-out phase. It transforms the revaluation thesis from a speculative wish into a complex, but now possible, operational procedure. It shifts the power from rumor mills to central bank servers. For the holder, the mandate is clear: shift your focus from dates to documentation, from hype to compliance, and from passive waiting to active understanding of this digital monetary transition. The future of the IQD will be written in code on a digital ledger under the watchful eye of global regulators. That future has now begun. Your strategy must evolve with it.